What's up, everybody? Welcome to the most boring, no, exciting recap of the Portland real estate market. Today, we're going to recap the 2023 Portland metro area. I think there's going to be some surprising things that we talk about in here. My name's David Christopher Caldwell. I'm going to give my whole name. My name's David Christopher Caldwell. I'm with Krista
Nikolai Britton.
Yeah, I'm here with Krista Nikolai Britton, and we are going to talk about the housing market in Portland. So since we like visuals and I made a slide deck, let's get this thing up here and let's get started. I think the most important thing to point out about 2022, when we're recapping the market, is the Portland metro area actually saw a 6.8% increase in the average sales price. Now, does this mean every home increased in value by 6.8%? No. Does this mean every area? No. Does this mean every price band? No. An example would be Lake Oswego appreciated a little bit over 2%. Sherwood appreciated a little bit over 7%. Tigard appreciated about 12%. The Portland metro area, it all averaged out to be 6.8%, but the average sales price going from $571,900 to $610,900. Thoughts, Krista?
I like when you break down the different areas and specify just because it's a 6.8%, it doesn't mean that's everywhere. Every area is different, every situation is different. But I think a lot of people are going to be surprised after all the doom and gloom in the headlines last year to realize we still had excellent appreciation overall in 2022.
You know, what's interesting is like there's the doom and gloom, and then there's just the no opinion at all. And, you know, we really try to give our opinion and thoughts on the real estate market. And I've been giving this example of people I coach recently. If you called your financial advisor and you said, what happened with my money last year? What happened in the market? And they just answered good or bad, you would not find that to be an acceptable answer. But that's the standard answer in real estate. It's good or bad. Well, how do you quantify good or bad? You know, we could look at last year's market and we can find good things in the market and bad things. I have a tendency to want to judge the market on price, right? Was I able to successfully sell my house and what happened with price? If we look at the 30-year annual rate of appreciation with this graphic that we put together, we had 6.8% last year. That's a percent above the 30-year average. That seems great to me. And while we're on this note, you know, if you look to the graph on the left, it shows since 1993, the 12-month rate of appreciation, the kind of that annual rate of appreciation every single year for the last 30 years. 26 years of the last 30, we've seen appreciation. Really, that's now 31 years because we can go back to 1992. That's as far back as we can get the data, but didn't look as pretty. 5.8% annual appreciation. What that would mean is if you bought a house and we just averaged 5.8 year in, year out, year in, year out, after 12 years, the value of the home would double. I mean, to me, this just shows that this is buying real estate in the Portland metro area. If you buy the right property, it's in the right condition, we can go through all sorts of things. But if everything was good, right, we're just living in the house, it's a great investment and it's safe and it's stable.
Mm-hmm. It's a safe, great, easy, long-term investment, if that's what you're looking for. And a lot of people are very risk adverse. So when I show people and they're so scared to buy their first home, I get it because it's an unknown, but I'm so happy for them because they are setting themselves up to succeed.
Yeah.
And to build that financial future and stability.
The easy thing's the interesting thing because, you know, people go, well, what goes up must go down. And yeah, and with a lot of asset classes, for sure. Like, look what happened with cryptocurrency. Well, yeah, the magic ledger in the sky didn't work out. Not a surprise. Well, what about trading card values? What about, I watched a video where someone was talking about the cost of boats is going down. See, housing prices have to fall. What's the economic utility of a boat? Right? Like most people don't live in their boats. real estate, unfortunately, is a difficult asset to sell. There was all these companies the last year, couple of years called, Zillow's doing iBuying, brokerages were doing iBuying, Open Door, and none of them have been able to make money. Because what they proved is you can't buy someone's house in the short term at a fair price and turn around and sell it and make money, because these are difficult assets to hold on to. And by the way, every negotiation is different, right? Like there aren't a specific set of rules for the negotiation or the conditions someone's going to accept. But if we just look at that graph, right, I'll put it back on the screen. If we look at the last 30 years, good luck guessing the bottom of the market. Like the market doesn't really go up and down.
That's really the most common thing right now too, is people are like, I'm waiting for it to bottom out. I'm waiting for it to bottom out. Let me know when you got that crystal ball.
2022, we had every market situation that could have made home values go down. We had the cost of a mortgage increase, rates basically almost doubled or doubled, depending on how you look at it. We, under the technical definition of a recession, had a recession, Q2 and Q3. And then, by the way, we came out of a recession in Q4. Oh, by the way, if history repeats itself, generally what happens when you come out of a recession, interest rates decline. By the way, interest rates have been declining.
Weird.
History repeats itself all the time. I used to look for reasons why the market would decline, but I didn't really look. I just had opinions. And when I actually now look for reasons why maybe the market could be unsettled or something, I just go, oh, wow, 26 years of appreciation over a 30-year period. I'm going to double on average every 12 years. I wish I had more money so I could buy more houses. The right houses. We don't like selling people the wrong houses. But let's move on, and we're going to talk about what happened with listings. We're going to talk about what happened with pending sales. We're going to talk about what happened with closed listings. And if you want a breakdown like this for the area you work in or live in, let us know, right? If you're in Sherwood, if you're in Tigard, if you're in Lake Oswego, if you're in any of the suburban areas around Portland, if you're in Northeast Portland, wherever, let us know. We'd be happy to chat with you about what's actually happened in the market. When we look at new listings, I think let's ignore the left-hand side of the screen. You can read it, but we won't get into it very much. December, new listings are always down. Most time people don't list their homes in December. But here's what's important to look at, which is new listings over the last 5 years. When people were saying there weren't any listings, no one was listing their houses for sale in 2021, we were saying, well, there's actually a pretty normal number of listings when we look at the last couple of years. Now, today, people are saying there's too many listings. We're doing price reductions. Home values are declining, which we already refuted. That's not actually happening. Price reductions are part of every healthy real estate market. I'll say that again, in case you didn't hear me. Price reductions are part of every healthy real estate market. But we had 36,210 listings come to the market last year, which represents a low going back almost to 2013. So basically, we had almost a 10-year low for new listings. Now, we've averaged around 40,000, so we're only off a little bit more than 10%. That wasn't super significant when we go talk about pending sales. But here's where it could be significant if you're a buyer or seller thinking about selling your house or thinking about buying. If rates were to stay high, it's reasonable to think that the deceleration in appreciation would continue. We went from 15% to 6%, right? Normal years, 5.5%. Let's say we average somewhere between 1 and 3, and we had less pending sales. That 36,000 number, it might be less because people with a 4% or 5% interest rate might not try to sell their house in a difficult market. They'll just stay and wait out the market. That's what you hear a lot. But if all of a sudden rates are in the low 5s, if all of a sudden people can get an affordable mortgage or they feel comfortable entering the housing market because interest, or they saw that appreciation was 6.8%, well, man, we actually do have a listing shortage. We don't have a lot of listings that came to the market in 2022. And if that were to persist going into 2023, that could really create a problem. All over the country right now, you have a tale of two markets. You have really high price markets, which Portland is not. Really high price markets, you're starting to see some price depreciation. But more affordable markets and more affordable price points in Portland, you're actually already starting to see multiple offer situations come back. By the way, multiple offer situations are a healthy part of the market. Now, 2021, the amount of multiple offer situations was completely unhealthy.
Mm-hmm.
Would you add anything to that or have any questions about that, Krista?
No, I think you nailed it there.
I talk a lot. Okay, let's go to pending sales because this is a concern, right? 36,000 new listings in the Portland metro area in 2022, 26,000 pendings. Gosh, 2021, we had 40,000 listings, no houses to buy. We had 35,000 pending sales. There were still lots of homes that were left unsold. What I'm trying to point out here, if you went back and looked at the last slide, is that pending sales and new listings, they're never perfectly in alignment. There's always a several thousand home gap. But we have to go back to 2013 until we find a number like 26,000 pending sales. It's been a long time. Now, I'm sure some of that has to do with affordability, less people being able to afford homes. But I think a lot of it has to do with negativity, right? Or people waiting, or people thinking they can time the market. What I would point out is that 26,000 people is a lot of people, by the way. That's a lot of homes to sell. Those 26,000 people purchasing actually made home values increase by 6.8% because on average, they paid that much more for a house than the people paid the year before. How few homes would people have to buy in order for values to go down? And I don't know the answer to that question, how many people would have to be selling versus how many people would have to would be buying. If we go back to the last recession, Great Recession, where home values actually declined, what we had on the market in an annual basis was, I'm just going to look at 2008, 54,000 listings, 19,000 pending sales. The gap between 54,000 and 19,000 is incredible. We had 36,000 listings last year. Basically, to make the values go down, you need another 20,000 homes not to sell. That's what it took last time. So, and we had a big foreclosure crisis. We have like no foreclosures in America right now. I mean, there's all sorts of things that we could talk about, but what happens to these pending sales, right? We average around the same number of pending sales most years when we look at the last decade, with the exception of 2020 and 2021. They move forward or they move backwards. So my question is, and I don't know the answer, did a lot of people that wanted to buy in 2022 end up buying in 2021? Or people that wanted to buy in 2022, if there's rate relief, will they end up buying in 2023? I mean, how many people are you talking to right now, Krista, that are just sitting on the fence, waiting for values to drop, even though they increased by 6.8%?
They're either waiting for values to drop or they're waiting to see if interest rates will go back down. But the problem with waiting, right, you have to decide what kind of market you want to be in, because the minute interest rates drop again, right, now you're going to be back in that multiple offer situation, and we're going to start to see house prices going back up. Or do you want to be able to make an offer, negotiate, and maybe have a little bit higher of an interest rate that you at some point can refinance? I mean, everyone's different with their comfort level. So it's just,
yeah. The price of the home goes this way. Mortgage rates are always in fluctuation, and it's easier to refinance a house than it is to buy or sell a house.
Right.
This is something I've been thinking about a lot, which is exactly to your point. If I were to buy a home, would I want to buy a home in a marketplace where interest rates were really low, where the market was moving really fast, and maybe I had a little bit better payment, but maybe I felt a little bit more rushed? I didn't get to negotiate as much on repairs. I didn't get, to maybe be patient and find the right house. I just kind of, the market we were in 2020 and 2021, I absolutely hated, because it just moved at breakneck speed, and it was, transactions were very one-sided. Or would I want to buy a home in a more traditional real estate market, where if we ignored the news, today would look like more of a traditional real estate market? Homes are sitting on the market, depending on the price point, for a couple days or a couple months. Not everything was just selling in a couple days. I could look at a house on a Wednesday. I could go back and look at it on a Friday, and maybe we'll get an offer on it, but a lot of times not. I'm able to kind of choose between like 2 or 3 houses that I like. I don't have to have a conversation in the driveway about what I'm going to write over asking price. And the pricing question is kind of funny, because in 2020 and 2021, in the driveway, people would ask how much over asking price do they need to go. And today people ask how much under asking price can they get the house for?
Yeah. Totally different conversation.
That's the market I want to buy a house in. Like, I want to buy a house in the market, which is, how much lower can I get it for? Knowing that the average person stays in a home for 10 years. And that the data we showed in the beginning of this talk is that on average in Portland, over 30 years, the average home has doubled in price every 12 and a half years. That makes me feel good.
Makes me feel super good.
Okay, let's talk about closed sales real quick, and then we're going to wrap this thing up, because we've really talked about the important things, and we'll just give some advice on what do we think we need to do next with people. Closed sales. Hey, closed sales are down, or pending sales are down, so closed sales are down. One thing to note, we had less pending sales. We had less pending sales in 2022. So in 2022, we had some carryover pending sales from 2021 that made this number a little bit higher. That's why I don't care about closed sales as much. I want to look at pending. What's happening last month, this year? What has been the market activity this year? 27,000 sales, or almost 28,000. It's not that far off what would be considered normal 2018, 2019. What is off are pendings. So we're going to see that show up a little bit more in this first quarter of 2023. If we summarize, new listings are down 10%, pending sales were down 25%, closed sales were down 20%. Let's talk about what people need to know if they're a home buyer or seller. So if I'm a home seller, if I'm thinking about selling my home going into 2023, Krista, where do you think people start, or what do they need to know?
I mean, the first thing is, besides prepping the home, having it ready, all the same things are important, right? Pictures, curb appeal, all that kind of stuff. But price, pricing right, because days on market matter. And people, like, I love your beauty pageant, Black Eyed beauty pageant. You're gonna, the longer the house is sitting there, the more people are gonna worry about what's wrong with it, why it's been sitting. So pricing correctly, which, sometimes you don't know. Sometimes, you kind of take a stab at it. It just, the market depends. I've been proven wrong. I've been proven right.
We're wrong and right in both directions, right? Now, we do a lot of analysis as a team, and, I don't know how many other agents in Portland out of the 14,000 could even tell you the average sales price, let alone get you 30 years of information on appreciation. We think that's important, because we're not selling friendship, we're selling advisory. And we think people deserve the best advice. What Chris is saying is, hey, you need to prep the house depending on the price point, depending on the price band. If you want to maximize value, there is a certain amount of preparation that needs to go into the property. Don't call us on a Wednesday to list your home on a Friday. We could do that if you want us to. We just prefer not to. It's better to plan out in advance. If you're planning on selling your house in June, let's talk today. We're not going to pressure you. We're just going to get you the information that you need so you can make an informed decision. Hey, pricing's a moving target right now. Depending on what's happening, the timing for the market and your timing, those things might not be in alignment. And, what Chris has said that I love to tell people is, when your days on market gets high, when you have a sale fail, when things aren't going your way, when you're a home seller, it's like having a black eye in a beauty contest. You might be really pretty, but it's hard to win. And, we're representing sellers and their most expensive asset. Here's some advice I would have. There aren't enough buyers to buy every house, and there never will be. So that's where what Chris is talking about, preparation and price, is really important. Do not reduce your price every 2 weeks. A lot of agents deploy that as a strategy. And then smart agents like us, we just wait. And then we go negotiate hard at the end of that 2-week period, right? Like, people start watching. I sold a property earlier this year for close to 700,000. Same property. A month later, Krista sold 7-8 houses away, $100,000 less. Well, guess what? That agent reduced the price every 2 weeks. It paid to be patient.
A little bit of a fire sale, and my buyers were happy.
Yeah. Another thing that sellers need to be aware of is your $5,000 or $10,000 price reduction might not get it done. When we have 30% of the market not going pending that's being listed for sale, you really need to be discussing strategy with your agent. Plan A, plan B, plan C. You need to really think about the trade that you're going to make. I mean, there's so much, we can't even cover all of it. But if we go into a market like a lot of people think that we're going to be going into, it doesn't mean home values are going to decline, but it doesn't mean selling a house is going to be easy.
Yeah.
There's 10,000 people whose homes didn't sell in 2022. They all thought they were going to sell. Everyone thought they were going to sell them. So let's talk about buyers, because buyers have a lot of opportunity right now. What advice would you give to a buyer?
Be patient, right? If you don't know what area you want to be in, well, one, pre-approved, get pre-approved, because your pre-approval letter from 6 months ago is going to be totally different. Interest rates have changed. What you were approved for, you're no longer approved for. Figure out what
you might be approved. You might be approved for more because interest rates have declined.
Yeah, they've gone down, like they've gone up and down. So depending on the last time you've gone in, that's something you just need to stay on top of, right? And knowing just because you're approved for something, you need to figure out what you're comfortable with your monthly payment, right? And then, I mean, before buyers, I had buyers that were like, hey, well, we'd be happy within these 4 cities. Well, now if you have a specific school district, or you can wait. You have a little bit more time. Look at more properties.
Yeah.
It's crazy. Before, like at one point, I was only showing 1 property at a time, and now I'm back to showing. I can show 6 and 7 in a day.
Yeah, I love that. You know, because I think our mantra at our team has always been like to be a discerning buyer. Like, we're not into waiting for the market to do something, but we are about waiting for the right house.
Yeah.
Now, the right house sometimes isn't at the price you want it, but you can afford it and it's still the right house. You just want it to be $20,000 less, but the market value is actually what it is, right? Here's something some buyers need to know. The more affordable entry level price point is always more competitive. There's more investors there. There's more first-time home buyers entering the market. There's people downsizing. We're already starting to see that price point get competitive. If rates go lower, it likely gets more competitive.
I think a good example too is we just had a price drop. One of our listings was at $550. We dropped it to $525. Then they got a ton more interest and they were able to sell it at $550. Now, if those buyers that had been circling around had maybe come in and made that low offer, because I think a lot of times with buyers, they're scared, well, it's priced at this point, I don't want to make a lower offer. Or they're, make the low offer. Even if it doesn't stick, you've got a conversation going. I've also had buyers make an offer and then the people are like kind of stuck on their price. 2 weeks later, the sellers have come back to me and said, would they still go with that offer? My sellers are willing now. Yeah. So I would say if you like something, make the offer. Yeah. Because if they get to that price reduction, now more people are interested. Now you're in a multiple offer situation.
Yeah. If you're a buyer and you're in a more entry level type of a home or price point, and you want to move your price point up, the payment's going to change, right? But maybe you're someone who bought a house in 2018 for 300,000 and it's now worth 500,000, and you want to move up into that $700,000 or $800,000 home. Those $700,000 and $800,000 homes, for the most part, are not selling as quickly as the lower part of the market. So to a certain extent, you're selling in a seller's market kind of across the board, but you might be in more of a extreme seller's market on the lower end side of the market, but you're buying in a seller's market where a lot of sellers are pretending like it's a buyer's market. And they're pretending like it's a buyer's market because their agent's telling them it's one.
Yeah.
And we want to help you negotiate against that agent. Right? There is a lot of opportunity for buyers in 2023 as we're beginning the year, because there's so much negativity. And it reminds me of, I love Warren Buffett, America's rich grandpa, very ethical investor, very safe investor. But one of his really famous quotes, I think it was his at least, is be greedy when others are fearful, and fearful when others are greedy. Now, the stock market and the real estate market isn't the same, because there's so much more volatility in the stock market than real estate. Real estate is more about demand volatility versus price volatility, and stock market can be both. But there's a lot of people that are afraid of what's going to happen in the real estate market right now. And if we go again back to the beginning, the first slide, 26 years of appreciation, an annual rate of appreciation of 5.8%, average doubling of home prices every 12 and a half years over the last 30-year period, and only 4 down years in the real estate market, it feels pretty safe to me, right? Like, if I ignore my Uncle Bob, who's never bought a house, who thinks home value should be 1992 pricing, well, maybe like I'll look and think things aren't so bad, So, okay. Why don't you do a little outro for us, Krista, for anyone who's still watching?
If you are interested in buying or selling, or just want to talk about real estate, go ahead and reach out to us at hello@hillshirerealtygroup.com, and we'd be more than happy to converse with you and discuss what's going on with your personal situation. And thanks for listening to our super boring talk.
And if you are still watching, like, subscribe, like, share, like we do these every single month. So we'll see you next time.